welcome to episode 4 of Word on the Street, presented by Warren Street Wealth Advisors. I'm Philip, co-host of the show, also a portfolio analyst for the firm. And with me, I have the one and only Blake Street. How's it going?
It's going well. I'm smiling because we decided earlier in the week we weren't going to wear matching polos, Warren Street Wealth polos, and we still ended up matching anyway.
That's right.
So,
that's right.
This color is kind of gray, whereas yours is black. So it's
Yeah,
about the only difference.
I've got a bit of differentiation. So just a tiny bit, just a tiny bit.
How are you feeling post CFA level 2?
I feel like a free man. You
Yeah.
know, I mean, I was down in the trenches probably the week before the exam, knocking out like 12-hour study days. I don't know if I got to see the sun on some of those days, but it's good to feel free, good to try to enjoy yourself when you're not working as hard. I just took my lady and we watched Hamilton, this past weekend. So amazing musical, and kind of evoked the sense of patriotic feeling that I feel like. So that was definitely something great.
I can dig it. Well, I know we're going to be talking about some heavier stuff today, so important to take note of the good stuff.
Absolutely. But now we wanted to turn our attention over to today's topic, which is something that you all have probably seen whenever you turn on the TV, whenever you pick up a newspaper, and that's essentially the Russia and Ukraine war. We're by no means, geopolitical experts, but we're going to do our best to try to cover as what we know, and bring information up to date for the purpose of this podcast.
Yeah. I saw Morgan Housel, one of I think the brightest minds in finance, tweet recently. I have no idea what happens next. And I think that's really like a fair perspective for anyone to have. Like, we all get around the water cooler, we all get around the kitchen table, and what do you think happens? And what is he going to do? And how far is this going to go? And like, truthfully, no one knows. And we have our hopes and our optimism and also our worst case scenarios in mind.
Yeah.
And it's our job as portfolio managers and asset allocators and financial planners to help people kind of couch everything that they're feeling, everything they're consuming, and then come away with like, all right, what is an actual action plan? So I'm not running for cover at every moment's notice or overreacting at market sentiment or news headlines.
Exactly. So, no, definitely. But yeah, turning our attention over to this full-scale war, a few weeks back, you had Russia, and over the past 7 years, actually, they've been amassing troops all along Ukraine's borders, right? And on February 24th, they actually entered Ukraine. So they launched that full-scale invasion. But we actually want to talk a little bit more about the sanctions, right? Just what is the penalty that is being imposed on Russia for doing this? So that's kind of first order of business. The sanctions, from what I understand, there are plenty of them that you could go through, but what we want to cover is, number one, there were sanctions put on Russian President Vladimir Putin, and also some of the members of Russian parliament. So freezing their assets, prohibiting travels for some of those folks. And at the same time, probably the predominant one that you've seen, SWIFT, right? Kind of the international transactions system that people use to transact overseas, and also central bank, right? Freezing some of Russia's central bank reserves. So on top of that, just to lightly mention a few more, Germany suspended the approval of the Nord Stream 2 pipeline going from Europe to Russia. And at the same time, just yesterday, the US announced that they would no longer be importing any type of energy product from Russia itself. And last thing to kind of top it all off is banning the sale of aircraft or other high-end technologies to Ukraine, or to Russia, excuse me. And also, you even have some companies that are recognizing this conflict and saying, hey, let's get out of Russia. Let's take our operations, off of this location. So, like, how do you order a venti Americano from, or how do you say that in Russian, right?
I have no idea.
I don't think you'll need to. Because,
one of the many things I don't know.
Exactly. I don't think you'll need to, because Russia just removed all their operations, or Starbucks removed all their operations from Russia, right? Yeah. Same with like McDonald's closing down all their 850 stores in that location. So that was a mouthful of sanctions. But I want to kind of, ask you, like, did any of these kind of catch you by surprise? Would you consider one of them to be more crippling than the other?
I don't think by surprise. I mean, we've really kind of emptied the hopper in terms of sanctions that we can place on Russia at this point. The question is, kind of what's next. So the U.S. today announcing, or maybe it was, a combination of yesterday and today, announcing an outright ban on all, oil, natural gas, and coal imported from Russia. The UK kind of announcing a hybrid plan to potentially phase out of it, over time. Oil specifically, not necessarily natural gas. And then the European Union kind of casting their lot and saying, we hope to phase out of 2/3 of Russian imports of energy by year end. And then by 2030, completely out of any dependence on Russian oil. So, how it seems as if Western nations and specifically NATO is doing everything it can not to get engaged in militarily and not add any bloodshed to the war that's currently going on. And so everything at this point has been supplying arms. Actually, one thing that has surprised me has been the move by corporations to not do business in the country, to divest. You see energy companies, ExxonMobil as one example, divesting ownership in Russian oil and gas companies. You see companies like McDonald's exiting, PepsiCo, removing all of their soda products, but continuing to sell baby and formula products, which shows kind of the humanitarian aspect of this, of like, how do you make Vladimir Putin and the oligarchs and the Russian parliament, all these people, the pariahs that they're supposed to be economically, without also sharing the load necessarily with all of the Russian people, because you're also trying to turn their perception of things against Putin as well and create internal strife.
Yeah.
So no, I've been encouraged by the pace and the unison with which the international front is kind of responding, but you just kind of get left wondering, like, what will Putin respond to at this point? So.
Exactly. Just to add on top of your point about the human element, I mean, even McDonald's, even though they withdrew their operations, they're still keeping their employees on payroll. And again, it's how do you want to define the relationship with the Russian people themselves and be able to distinguish that from the kleptocrat that is Vladimir Putin, right? But at the same time,
the ban on gas or or energy at large, depending on who joins the U.S. and kind of that endeavor and that effort, is what is financing the war machine. So that to me is the most important critical thing to get the rest of the world on board with over time, because that will upend the Russian economy more than anything else.
Yeah, exactly. I mean, let's talk a little bit about that Russian economy, right? Because this is what the sanctions are trying to punish at the end of the day. We're talking about when it comes to Russian energy exports, you have 12% of that making up Russian GDP, 50% of that making up the Russian entire government revenues, right? And let's talk about the countries that are dependent on Russian energy exports. 40% of Europe's natural gas comes from Russia. 50+% of Germany's natural gas comes from Russia. So just to kind of better illustrate this to you all, what we have in front of us is a chart that exhibits, this is pretty much an index that captures, which countries are going to be most vulnerable to this Ukrainian-Russian war. And it's an index that includes which countries are most dependent on energy exports, and for those energy imports, and for those energy imports, what percent of that is reliant on Russia and Ukraine.
Right.
So over here, towards the left of the chart, you'll see that between Hungary all the way to Italy, that is the group that is the most reliant and the most vulnerable to this geopolitical conflict when it comes to the energy space, right? But if you look at the broader Europe space, EU or Euro area, they're not necessarily as vulnerable too. So I don't know, Blake, if you have some 2 cents you want to add in here.
This is just the obvious truth as to why not everyone can behave like we do, in terms of just ramp up production of natural gas, drill more, frack more. It really comes down to like the humane aspect of like, well, how do they keep their lights on? How do they keep their homes heated? How do they keep their hospitals running, and their cars on the road? So they can't just flip the switch and choke the Russian economy all at once. So it's a really difficult thing, and we need to play our part in helping these nations figure out production, logistics, supply chain, filling the quota that they need to fill, and as far as the void that will be created by Russian, bans on imports.
Exactly. Just talking a little bit more about exports and some of these commodities that are going to be affected. I mean, Ukraine and Russia combined, they account for 33% of global wheat production, right? Then you have corn exports. Ukraine and Russia also account for 25% of global corn trade.
Yep.
And last but not least, this was interesting to me, sunflower exports, right? Sunflower oil. Yep. Ukraine and Russia account for 80% of that production. Yep. So, sunflower oil, that eventually trickles down into your potato chips. So you could see a bit of a price increase if you go to the supermarket. Corn, corn is used to feed hogs. So my dad loves Chinese barbecue, and with the price of hogs expected to go up based on, imports and that food that you're feeding them with expected to go up. He's probably going to feel it whenever he goes to buy some, barbecue pork.
Yeah.
But, that's what's happening with commodities, right? That is the turmoil we've talked about within the commodity market. We've talked about the turmoil with Russian energy, but what about markets, right? Just to read off how much have markets sold off. Before the invasion, the S&P 500 sold off about 11.7%. Global stocks sold off a lower amount, 9.4%. Post-invasion, up till today, the S&P 500 sold off 12.8% from its high, so about 13% or so, whereas global stocks went from selling off 9% to about 13.4%. So you kind of turned the tables a little bit where global stocks are feeling it a little bit more than the S&P 500. But just to paint a broader perspective, we want to share this chart. Basically, this is a growth of $10,000 chart, where if you had invested $10,000 when the S&P 500 was incepted in 1950, and you remained invested, which is an incredibly hard thing to do. I mean, I don't know if I could do it, honestly, for, what is that, 70 plus years, you would have grown that $10,000 to over 2.5 million. Now, we also want to highlight, some of the additional geopolitical conflicts that are overlaid onto this chart, whether that be the Korean War, Cuban Missile Crisis. You even have some of the conflicts that are happening in the 21st century, such as 9/11, invasion of Afghanistan, even the 2020 coronavirus pandemic. I don't know, Blake, what does this chart kind of speak to you?
Well, I like these charts and I hate these charts. The reason I like them is because they speak to the general phenomena of capital and wealth creation, and how the general trend is up and to the right, and that over the long term, there's been a lot of kind of events that potentially threaten our very existence or our very financial system, and that we've always tended to figure it out, right? Because this chart, isn't log adjusted, and it's over such a long period of time, it does downplay a little bit of the volatility in the moment, but it also, I think, captures kind of the sentiment, or I guess the overreaction and the sentiment and the sell-offs that occur around these events, and how you have to figure out how to behave when these things are occurring, and think long-term, like, what is my standard operating procedure? How am I going to adjust or not adjust my portfolio? Because maybe my portfolio was built for the long term that included backtesting geopolitical shocks and wars and things like this. So, the chart's also not inflation adjusted, but you've heard me before, no better kind of horse in the stable to fight inflation than stocks. And this is just one more example. Like, we just went through the coronavirus pandemic where the market sold off a third. And it was very easy to want to run for the hills and go to cash and feel like the world was ending. So US equities were already in their own sell-off. You kind of spoke to it just prior. We were kind of celebrating the strength in overseas equities, specifically European equities year to date. That's been completely turned on its head, right? And so I think there's been a total decoupling of, this price movement not reflecting the underlying fundamentals of these businesses and these economies. And the market's just trying to figure out how bad can this thing get. So it's a pure sentiment trade for the time being. We were already in the midst of supply chain shocks and inflation and things like that. So throw this on top of it certainly doesn't help. But stocks for the long run. I still, stay long, rebalance, tax loss harvest, do all the things you can to make lemonades out of lemon. And hopefully this chart kind of supports that narrative. Yeah, exactly. I mean, it's controlling what you can control, right? And understanding that historically risk does beget return. Yep. Right. But I know you talked about, hey, this isn't a log chart, so it might understate some of those drawdowns. A 30% drawdown that happened in, let's say, 1950. Yep. Might not be able to see that on this chart, right? Yeah. But we're going to go ahead and overlay this other chart. So this is a table that shows, and you'll see us share this quite often, but this is basically showing, hey, what was the peak to trough drawdown during a geopolitical war, and what were the returns 12 months after that, 24 months, and then 36 months. So 1, 2 year, 3 year returns afterwards. And you'll notice that in most cases, those numbers are green, and you've more than made up for, what that initial sell-off was. Had you remained invested? And this is also another example of, why running for the hills isn't necessarily the move to make when there's these sell-offs happening. And we also have World War II for reference. Blake, I don't know if you want to speak to this a little bit more, but would you say that this conflict, out of all the conflicts on here, is relatively a bit more closer related to
World War II in terms of the sell-off, in terms of the geopolitical circumstances?
Maybe if you're trying to shape like the worst case scenario, I think it's far from that today, right? It's very much so a regional war at this point. Can it get worse? Absolutely. But it does make us at least quantify a civilization ending type nuclear war, which we've talked about, like how to respond in an event like that portfolio wise. Well, there's not really a whole lot that you can do if the world's ending. But looking at some of the other events on here, I think the Great Recession is a good example of like the financial system was being brought to its knees. And I heard a lot of capital allocators at that time, especially academics and others saying like, maybe this is different. Maybe this is the end of the system as we know it. So I mean, I hope this is much more like the Cuban Missile Crisis, right? Like a relatively muted sell-off and things kind of stabilize and we're staring at green 12, 24, and 36 months out. I hope peace prevails and that most of the pain is borne by Russia in this instance.
Yeah.
But all of that being said, future being unknowable, I think it's important just to note, like, generally speaking, in all of these events, in aggregate, you could say that it pays to keep a long-term perspective and to stay long, rebalance into weakness, make prudent long-term decisions, not get caught up in the hysteria of the moment.
Exactly. That's a lot of the market perspective that we have. But now we want to turn our attention over to the global economy. And just because I feel like, when we're turning on the news, we're just so focused on what's happening between Russia and Ukraine right now that sometimes we might lose sight of the bigger picture.
Yeah.
And what we have in front of us is basically 2022 median real GDP growth estimates, or in other words, estimates for what analysts are projecting for this year's economic growth.
Yeah.
The blue bars represent what those estimates were pre-invasion. Gray bars represents how the estimates were revised post-invasion, and those yellow dots represent what the long-term growth rate of our economies are going to be for the next 4 years. And I think it eases some mind when you look at this and you realize that, hey, even though there have been downward revisions to these GDP forecasts, they're still growing well above trend, right? So I know, Blake, you're not a big particular in like forecasts. You've mentioned that a number of times, but anything else you want to add here?
No, I think macro forecasting and just macro in general is complicated all the time, now more than ever, just with COVID and everything happening with the world and now a Russia-Ukraine war. But I often just think about in my own life and companies that I follow, what is changing? Are there hiring patterns changing? Are there layoffs? Are people changing the way they consume or spend? Obviously, sentiment is different than behavior. And from a United States perspective, aside from the pain at the pump, which I don't want to minimize, I don't see anything just yet that is going to kind of materially turn the way we live upside down. There may be some switching costs, sunflower oil getting out of hand or particular products becoming less accessible. It's not as if you don't find something else to switch to or to consume in lieu of. So we have a way of kind of working these things out on our own. So yeah, I hope the downward revisions don't get too much worse, because they certainly can. But there's also still a lot of things to like globally. And my optimistic side still hopes that this conflict and this war finds a way to resolve in time with as little human loss as possible.
Sure thing. Just to provide some additional perspective, we want to talk about Russia and the size of the Russian economy relative to a few of the other nations on here. So this chart, this scatter plot, the x-axis is basically the population of the country. The y-axis is today's percent makeup of the global stock market, or how much exposure does the global stock market have to this country. And we really want to point out Russia and Texas. Or before I go further, the size of the bubble. The most important thing is the size of the economy. So you'll notice that Russia, circled in blue, has a much larger population than everyone else on this chart. But at the same time, that size of its bubble is pretty much the same as Texas, right? So this is pretty much going to show that Texas, has a population of 29 million people, yet its economy is bigger than Russia, whose population is over 140 million, right? And I think that's a way of showing, hey, the extent of what's happening in Russia right now is relatively limited compared to if it were a much larger nation, right? If it were like a G7 economy. But just to provide some additional perspective, we zoom out and take a 30,000 foot view, we overlay the United States, India, and China on here as well. You can really start to see, just how small Russia is and kind of the scope that they have relative to all these other nations.
Yeah, and Russia's not a financial center. Ukraine obviously not either as well. But from like a market perspective, before the invasion, they were a rounding error in terms of market capitalization. And I saw a stat recently. It's like 15 to maybe 20 companies in the S&P 500 are by themselves larger than the entire Russian market.
Yeah.
And so it really comes down to like, well, how are they financing this war machine? It's not based off of corporations and market cap and equity. It's the horsepower is, energy, wheat, et cetera.
Exactly. So now I want to kind of bring our attention back over here and just ask you a few questions as to, where you think this war is going to go, or how this is going to play out, and what it means for markets at the end of the day, because that's what we do. I know some people are scared of World War III, as they're putting it. How should we be perceiving, existential risk, as they call it?
Yeah, so I'll go back to my first answer of I have no idea what happens next, but I can kind of lay out the base case of kind of what we hope to see and what might occur. And I suppose we can start at like worst case scenario, which is a truly kind of civilization altering and or civilization ending nuclear war. It sounds completely insensitive and stoic, but if the world is truly ending and Russia decides to fire thousands of nukes, or at least try to, and we retaliate in form, everything's going to zero, right? And your portfolio is not going to matter, and things are going to get very, very difficult very, very quickly. Yeah. So it's one of those things that's almost impossible to model and impossible to plan for and account for. So you have to kind of capture that part of your DNA and not let it shape kind of your behavioral decisions and what you do with your portfolio. The hope is that this invasion is going a lot slower than Putin intended, and the public approval is much lower, over time than he might like, and that the sanctions do bite, right? And that their foreign reserves being frozen and being removed from SWIFT, and oil embargoes and all these different things actually make him think twice and blink. And he tries to do whatever he can from a PR perspective to kind of gloss over it and kind of paint himself with a small victory. And maybe that means taking down the Donbass region and carving out a piece of Ukraine, or I think the more likely base cases at this point, it seems like, is it's a long drawn out war with an insurgency element of some of these big cities do fall, but the Ukrainians are a very proud people, and that they continue to fight and fight and fight. And ideally, it doesn't spill across other borders, specifically NATO borders, where the US now is in a position that militarily has to get more and more involved. So yeah, there's a lot of different ways this thing can go. My optimistic side is that the Russian loss of life, the Russian loss of equipment, economic prowess, all of these things serve as a referendum on Putin as quickly as possible. And he has no choice but to kind of, hat in hand, go home and figure out how he's going to turn this into a positive from a PR perspective. So the Russian propaganda machine is obviously much more powerful and complicated than I understand. So his ability to do that and endure taking a big loss, maybe he can stay in power and turn this thing around and hold on for a long time. I really don't know, but I think the important part is international cooperation, making them feel the pain, especially economically, and on the international stage, just continue to make them more and more of a nomad as we possibly can. So difficult stuff, and again, hard to predict. Very important that the world rallies around it, one another, and figures out supply chain logistics, fuel production, conversion to renewables, all of the things that will make Russia less of a critical player on the world stage.
Exactly. And to your point about optimism and people rallying together, I was reading this piece from Nick Majuli, who writes of Dollars and Data. Feel free to go check his blog out. But he mentioned that he was optimistic, and he brought up, I think, that this really good point, that was this is the first time that a full-scale war, is being documented via social media to the extent that it is nowadays. And I think that can evoke a sense of empathy from the leaders that are going to be growing up years down the road, and what that means for diplomacy in the future. So optimism, rally cries, it's going to be a mutual effort from all our parts, right?
How long would it take 50, 70, 80 years ago for Russian citizens to, be in the streets protesting,
Yeah.
to even catch wind of what's going on, across borders.
Exactly.
You see the day of the first day of the conflict, thousands of people being arrested in the street. And obviously, if you look at the approval ratings and the polling that can be done, it still seems like Putin has pretty swift or pretty vast approval for what he's doing.
Yeah.
But that can change very quickly. And it's important that you apply the right kind of pressure to see to it that continues to happen.
For sure. I know that was kind of like a more heartwarming, I don't want to call it heartwarming, but heartfelt a little bit. Yeah. But maybe I should have saved that for last, but I still want to talk to you about, what this means for our portfolios, yeah. Right? Let's talk a little bit about what's working, right? And what's not working as well. So I was just curious, you've been a big proponent of international diversification, geographical diversification. So going the home country bias. Yep. Can you talk a little bit about how that's turning out today?
Yeah. So, the start of the year, very encouraged, kind of see somewhat of a rotation in terms of international market strength. It's certainly the cheaper part of the global landscape in terms of investment opportunity. The European region was doing quite well for us. That has all but been, removed and has kind of shared in the year-to-date sell-off in terms of order of magnitude to where the US already was and is. So we were holding our heads high about some international outperformance and kind of kicking myself right now a little bit in terms of getting high a little bit too soon on that. But at the same time, it goes back to, is the sell-off in European equities because of the underlying fundamentals, or is it because of sentiment and just a risk-off attitude? And I would argue that there are a lot of businesses, that our managers are purchasing where this has absolutely nothing to do with trade with Russia or supply chain disruptions or interruptions. Yes, there are some segments that will feel near-term pain, but as a long-term investor, we already saw those regions as cheap and attractive, and that kind of compounds this phenomena, assuming things don't get, existential crisis bad.
Yeah.
Emerging markets, kind of sharing the same sentiment in terms of a risk-off attitude and that sentiment trade. But nothing on the equity side of the portfolio for me has categorically changed. That can shift, obviously, in time. On the other side of the portfolio, our diversifier sleeve, we made some changes last year that we had no idea this type of inflationary pressure was coming. We had no idea necessarily that Russia was going to invade Ukraine, but buying into commodities, buying into metals, buying into global natural resources, and increasing a position that we've held for a long time, pretty much across the entire client base, has been the shining light, or the thing we're most proud of, and one of the reasons why we're holding up as well as we have year to date. And at the same time, though, that's also a sentiment trade, because you see what's going on with crude oil. If I had a gun to my head and had to predict where crude is in a couple of years, it's certainly not where it is today, right? And so we'll take it while we can. I think it's important that we, trim some of that fat and we rebalance out of that strength, and we use it to buy equities while they're oversold. And that's kind of where we're at today.
Yeah, likewise. I don't think I have anything to add there. I think you've pretty much said it all, but in the meantime, I think that's going to do it for today's show. Thank you everyone for tuning in, and hope to see you all soon.
Thank you all. Take care.